Yeah, let's start with session B1. The topic is regulatory ESG data. This presentation will be held in English. It was in the handout in the agenda, it was said that this is German. We're happy that Janine Hofer Wittwer will help this presentation in English. She works for SIX Financial Information. And yeah, she started working for SIX since in 2014, and she's responsible for SIX sustainability proposition. Before joining SIX, she had been working for UBS and Bank of America, Merrill Lynch in London. And Janine has an MBA from the University of Bern, and she's a CFA charter holder. Yeah, for the Q&A session, we have allocated 5 minutes at the end of this presentation, and you can enter your questions in the top on the right of the screen, and you can enter the questions both by name or anonymously. Yeah, glad to have you here, Janine. I'll hand over to you. Thank you.
Thank you very much, Alexis, for the introduction and for giving me the opportunity to speak today. A very warm welcome to everyone on the call. I will explain what the EU is working on when it comes to sustainable finance regulations, what this means for financial institutions and corporates, and how this relates to data. The presentation will last for about 15 to 20 minutes with time for Q&A afterwards. I am holding my speech in English, but if you prefer to ask questions in German, I am very happy to take questions in German as well as English, of course. For those of you who don't know SIX, SIX is the operator of the Swiss and Spanish stock exchanges, which includes trading and settlement services. SIX also offers banking services, for example, interbank clearing and ATM services. And we have a financial information business. This is the business unit I am part of. A few highlights. At SIX Financial Information, we have 90 years of expertise with the provision of data. We are also the operator of the ANNA Service Bureau. ANNA is the Global Association of National Numbering Agencies. ANNA is also the registration authority for the ISIN standard. We have won Best Corporate Actions Provider from Waters Technology for 11 consecutive years. And with our regulatory services at Financial Information, we cover more than 70 regulations worldwide. We have started building out ESG services in different areas. We offer ESG indices, and we recently made an announcement of the Orenda majority stake acquisition. Orenda is a Canadian company which offers high-frequency ESG scores and insights which are based on social media feed analysis. We are also working on ESG scores and underlying data, and one very big project we are working on is the regulatory ESG data, which is the EU Action Plan project, and it includes SFDR and taxonomy regulation offerings. And this is the focus of the presentation today. The EU is taking a leading role in fighting climate change and addressing social issues by developing regulations to finance sustainable growth. The EU Action Plan is based on the 2015 Paris Agreement on Climate Change and the UN 2030 Agenda for Sustainable Development. It has 3 main objectives. The first one is to reorient capital flows towards sustainable investments and sustainable companies. The second goal is to manage financial risks which are stemming from climate change and other environmental and social issues. And the third goal is to foster transparency and long-termism. And that's really where the data aspect comes in. Under the EU Action Plan, there are a total of 28 regulatory initiatives, including the taxonomy and the SFDR regulation. SFDR stands for Sustainability-Related Disclosures in the Financial Services sectors. There are also regulations that are not specific to the financial services sector, but these two are the ones in focus today. And in order to adapt to this new environment, financial services firms will be required to disclose specific information on their approaches to the integration of sustainability risks and the consideration of adverse sustainability impacts of their investments, both under the taxonomy and the SFDR regulation. These regulations will have a huge impact on almost all financial market participants in Europe and beyond. The big challenges are that there is a lot of time pressure and at the same time the regulations are not finalized. There are new developments almost constantly, at least that's what it feels like if you have to keep up with the changes. The last one came on the 21st of April when the EC adopted a proposal for a corporate sustainability reporting directive, or short CSRD. This would amend the existing reporting requirements under the NFRD, the Non-Financial Reporting Directive. Amongst other changes, the CSRD would massively broaden the scope of the NFRD from 11,600 to approximately 49,000 entities in the EU, including subsidiaries of foreign companies. Our assumption at the moment is that the NFRD will become obsolete, but this has not been confirmed. The amendments will be applicable for the first time for fiscal years beginning on or after the 1st of January 2023. Whilst the CSRD would fill a gap by requiring corporates to disclose on ESG matters, it means that until then, there is still an issue with the availability of company-reported ESG data. Now, for the financial service providers, the SFDR and the taxonomy regulations apply to investment advisors, product manufacturers, institutional investors, asset managers, and even insurance distributors and index providers. So quite a far-reaching regulatory standard. Geography-wise, it doesn't only affect financial institutions that are headquartered in the EU, but any financial institution with branches or subsidiaries in an EU member state or with client relations in the EU, or even a company that's managing EU-based products is affected and needs to comply. As SIX, we see our role as acting as a data hub by aggregating data from different sources and delivering this data to our clients via one of our established delivery capabilities, such as our flagship feed product, flat file, or API delivery. On the left-hand side of this picture, you see the investee companies, so the corporates. Now it's defined as large companies and listed companies, which will publicly report under the proposed CSRD. Those companies will report on sustainability risks and impacts, so-called double materiality, which is quite an important concept for these regulations. It means that companies not only need to report on the risks that affect them, so the risks from climate change and other environmental issues that affect their business, but also how they affect and what impact they have with their economic activities on the environment and society. On the right-hand side of the picture, you see the financial institutions that fall under SFDR. So these are defined as the manufacturers of financial products, mainly fund managers, but also investment firms. And these companies If they're bigger than 500, so manufacturers that have more than 500 employees will have to disclose. And for the others, there is the so-called comply or explain principle. It means they can also choose not to disclose detailed information and instead issue a statement that the adverse impacts of investment decisions on sustainability factors are not considered and the reasons therefore. However, if an institution wants to sell ESG-focused products, they will have to make detailed disclosures on entity level and also for those ESG-focused products. And we believe that end investors will more and more ask for sustainable investments, and therefore more and more financial institutions will disclose over time. So what we're doing is we're sourcing the investee company data. So from the left-hand side, we're sourcing that data and providing it to the manufacturers and the investment firms who need this data to make their disclosures to their clients. That's the blue arrows that you see in the picture. And then there is a second level of data, that's the manufacturer data. And that's the data that's published by the manufacturers of financial products on entity and product level. And we're sourcing that directly from the manufacturers, and also provide this data to the investment firms. So this is the red arrows in this picture. So what does it mean? So here an example of a fund manager, what a fund manager would need to disclose. So the fund manager discloses on entity level the so-called adverse sustainability impact disclosure, and that needs to be done on the website. And then on product level, for the ESG-focused products, the manufacturer will make disclosures on the website, in pre-contractual documents, so prospectuses, and also in periodic disclosure reports. And the disclosure is required for so-called Article 8 and Article 9 products. Article 8 being the also called light green products, and Article 9 being called the dark green products. Now to the taxonomy. The taxonomy is a classification system for sustainable economic activities. Currently, large companies are required to report under the NFRD. As I mentioned before, we assume that the NFRD will be replaced by the recently proposed CSRDs. Large companies will be required to disclose detailed information how their economic activities are aligned with 6 environmental objectives. The first 2 coming into force are climate change mitigation and adaptation, and then followed by 4 further environmental objectives on water, circular economy, pollution, and biodiversity. The data flow requirements for financial institutions is very similar to the one under SFDR. Investors will be required to disclose the proportion of underlying investments that are taxonomy aligned, and that will be expressed as a percentage. The 2 regulations are linked. Unfortunately, SFDR comes into force before the taxonomy, as the taxonomy is amending the SFDR disclosure requirements. Only in the middle of March, a joint consultation paper was issued by the European supervisory authorities on the taxonomy-related sustainability disclosures. This means that the soon-to-be finalized SFDR RTF, the regulatory technical standards, will be amended for disclosures of financial products investing in economic activities that contribute to one of the 6 environmental investment objectives. SFDR is also linked to other regulations like MiFID or UCITS, for example. Here an example of a link to MiFID II. Under MiFID II, private investors will have to be asked for their ESG preferences as part of the appropriateness and suitability assessment. Now, we've recently seen an upgrade under the EMT, the European MiFID template, from version 3.0 to 3.1. And under this new version 3.1, the sustainability preference flag was introduced. This means that now products that are Article 8 or Article 9 products under SFDR are also flagged as part of the EMT data delivery. We've introduced that in our feed or in our products to our customers in the MiFID II investor protection offering. We've introduced that on the 12th of April, so our clients can receive this data already today. And of course, going forward, we expect that all the funds that are flagged as ESG investments will make the detailed SFDR disclosures. In terms of timeline, the level 1 SFDR regulation is already in force. It came into force on the 10th of March 21, and it requires entity level and product level website and pre-contractual disclosures from manufacturers. Now, by the 1st of January 22, the level 2 regulation will enter into force, which will then require entity level PI, principal adverse impact indicator statements, and product level disclosures for Article 8 and 9 products in periodic disclosure reports. The actual making public of the information will happen in 2023 only. So it's applicable for 2022, but the disclosure will happen in the first half of 2023, because by June, 30th of June each year, the disclosures will have to be made for the previous calendar year. And then there will be one other requirement or milestone, and that's the adverse impact at product level disclosures, which are expected to enter into force on the 30th of December 2022. In terms of the sixth timeline, as I mentioned, on the 12th of April, we started delivering the sustainability preferences flag under the MiFID II investor protection dataset. And for the 12th of July, we will have the SFDR principal adverse impact data release in VDF. That's our Valor data feed, our flagship feed product, followed by 6flex, which is our file delivery, and also API delivery later on. On the taxonomy, there is a bit more time, but not a lot, and the requirements are hugely complex with the RTS not yet published. The main timelines here, 1st of January, the application of the disclosure requirements for the climate-related objectives, followed 1 year later by the application of the disclosure requirements for the other 4 environmental objectives. So the main takeaways of my presentation is that these regulations will have a huge impact on financial services firms and corporates, and over time will lead to wider and deeper ESG disclosures, as this is all about transparency. At the moment, the availability of the relevant data is a huge challenge and will need to develop gradually over the coming months and years. Thank you very much for your attention. I am now happy to take questions and look forward to an active discussion.
Thank you very much, Janine, for this interesting presentation. We have some minutes left for Q&A. The first question comes from Ronald Dahmen. Hi, Janine. If we were 10 years from now, is ESG then a standard? Or are we still waiting then for ESG boost then?
Sorry, what was the last part of the ESG?
Is ESG then a standard, or are we still waiting for ESG to boost then?
Okay, yeah. I mean, my personal opinion is yes, this will become a standard. I mean, we have seen a huge pickup in ESG investments over the last 1-2 years, and you know it's growing exponentially almost, and you know also with the regulations of course, but also the change in expectations from investors and private clients. I think it will become a standard over the next years. Yes, that's my opinion.
Mm-hmm. Next question. What are the biggest challenges of ESG data reports in the future?
I mean, at the moment, the challenge really is the corporate data. There is data around, but you know, as soon as you move to mid-size or smaller companies, or also companies in emerging markets, for example, it's quite challenging to source ESG data, especially reported data. Of course, we now see alternative means of sourcing data, for example, social media or news, which offers an alternative view to the company reported view. But this is really the challenge at the moment. And of course, again, also these regulations will change this as it requests for more transparency. And it's quite interesting that actually via the financial sector, there will come pressure to the corporate sector to make more disclosures, because it's also in their interest actually to talk about, you know, how they're performing on these different ESG topics. And it also helps them as issuers of equity and debt instruments to be transparent and you know, tell people how they're doing.
Mm-hmm. The next question is, how do you create government data as part of the ESG data?
Yes, so the government data is usually, of course, is how do you say, country data, basically. So that is also being sourced, and there are third-party providers out there who focus on that. We at SIX, we're working together with such third parties to source that government data.
Mm-hmm. Can I add a question here? I mean, you talked about companies offering data. What do you see with greenwashing? So there might be different interests. Yeah. Is this a problem or?
Mm-hmm. I mean, this has been discussed a lot, the greenwashing. And of course, one big goal, again, of the regulations is to combat greenwashing and reduce greenwashing, because, you know, there will be much more transparency. So I guess, you know, if someone wants to greenwash, it can probably not be completely prevented, but I think it will certainly reduce, and we will see less greenwashing going forward, because there is more transparency and more underlying information that needs to be made public.
Yeah, there might be inconsistency then, so easily detected. I see we have another question. CSRD is to be reported on product level, correct? Not only on entity level as NFRD. Well, this is very much into detail, but I hope.
Yes, because the CSRD will tackle the corporate side and not the product manufacturers. So SFDR, which I talked about in detail, is tackling the financial services sector and therefore also financial products. So that's SFDR, which requires disclosure at entity and product level. The CSRD, that's a regulation for the corporates to report. So in my view, it's a corporate company level reporting, CSRD.
Mm-hmm. There's a last question. What do you think about ESG boards? Do you think they are a good measure to improve governance? Yes, thank you very much, Janine, for this presentation. We have 1 minute left, so I then like to introduce the second speaker.